During times of economic downturn, more people invest in gold.
Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%. We're down over 16%.
Since the 2008 financial collapse, the cost of gold has remained high, making it a more challenging investment, but also a more rewarding one. With the cloud of recession hanging over the world yet again, gold again looks like an ideal monetary safe haven. But how does one go about investing in gold in 2023? Stay tuned to find out.
Gold is really complicated.
The gold prices have hit a record high.
This is a very uncertain time. The war in Ukraine, the U.S.-China tensions, the debt ceiling, recession risk. I want to have something safe in my portfolio, even if it's only a 2 or 3% up.
Gold is a beautiful, dense metal with a yellowish tint. It has been highly valued throughout history for its rarity and beauty. It has been used as currency since ancient times, with the first coins being minted in modern-day Turkey around 600 BCE. Thousands of years later, gold evolved into a way of valuing a country's currency, a concept known as the gold standard. And while this has since faded, gold remains an essential and highly traded commodity. Like all commodities, gold is affected by supply and demand. However, it is also closely tied to geopolitical events and extremely sensitive to financial crisis. During normal growth periods, gold is used to diversify assets or buy just for fun. But whenever the economic horizon darkens, investors worldwide take a tip from our ancestors and put their money in the safest asset they know. Anything can have value as long as it has demand. In fact, demand is one of the basic building blocks of any monetary system. But gold is different because its value is inherent and universally accepted. Gold is also physical. In fact, paper money was only invented as a representation of gold. This means that gold has value no matter what, just as it did in 600 BCE. So even if all the modern conveniences we have today disappear tomorrow, gold will still have demand. But the value of gold is not fixed. If you're new to buying gold, this may be a bit confusing. The first thing you need to understand is the spot price. This is the price at which gold is currently trading on the open market. It is directly related to current estimates of supply and demand. When demand is high, the price goes up. When it is low, the price generally moves downward. Of course, how far the price moves to either side depends on hundreds of different factors. Another thing you have to understand about gold is premiums. Since gold is physical, you must purchase it in the form of bars and coins. You will pay a premium over the current spot price, no matter which broker you choose. This covers the distributor's fees, transfer of assets, and other costs. Luckily, these fees vary pretty widely and can change based on your type of gold and the quantity you buy. So, what are some common types of gold? Gold bullion bars are extremely popular among investors. These range from 1 to 400 ounces and are typically produced by private or government mints. There are also tons of different gold coins. In the US, you often see American gold eagles, which are 22 karat and sized at 1/10th of an ounce to 1 ounce. Though they sometimes have a face value, it's important to remember that this has nothing to do with the coin's actual value. Gold buffaloes are the 24 karat version and feature 0.9999% pure gold. If you get deep into gold trading, you might also come across Canadian gold maple leaves and South African Krugerrands. If you're going to buy gold, it's essential to understand how traders measure quality. The term 24 karat gold, for instance, indicates that an item is 100% pure gold. But since gold is so soft, it is often mixed with other metals to create more unique shapes. Since 24 karat gold is pure, this mixture is expressed as a fraction of 24. For example, 18 karat gold contains 18 parts pure gold and 6 parts additional ore, making it 75% pure. Obviously, the amount of gold in your gold affects the price, so make sure you know what you're buying and that you get what you order. This brings us to the main point of the video, buying gold. We already talked about premiums, but it's important to understand how these can affect potential losses. For instance, since the value of your gold will fluctuate up and down hourly, you need to factor your premium into the total value of your asset. Too high a premium adds another layer of cost to recoup. As with any commodity, Buying gold necessitates that you consider what's called the buy and sell spread. This simply refers to the price at which you buy the gold and the price at which you sell it. Easy, right? Not so fast. Both of these prices can be affected by many things, such as the type of gold you buy, who you buy it from, and where the price sits in relation to historical trends. Buy low and sell high may be the investment rule of thumb. However, $1,000 an ounce seemed high in 2009 compared to the 2006 cost of $577. But now that gold is averaging $2,000, it's clear that 2009 would have been a great time to buy. Now let's get into the nitty-gritty of your upcoming gold buy. Now there are countless gold distributors out there, and just like any other product or service, you can easily find reviews and recommendations online. For what it's worth, this channel strongly recommends JM Bullion, APMEX, Bullion Exchanges, and BGASC. These distributors have the history and reputation that most first-time gold buyers are looking for, as well as great customer service. You can also buy physical gold from local coin shops, though this can be tricky if you don't know what you want. The men and women who own these shops have bills to pay. The best thing you can do is use a reliable spot price chart, such as the one at kitco.com, and put on your bartering hat when making your deal. One of the biggest questions first-time gold buyers have is whether they should buy gold bars, gold coins, or both. While you might be tempted to chalk this up to preference, there's actually a bit more to consider. For instance, coins generally have a higher premium over the spot price than bars, meaning you'll pay more. That said, you'll also get more when you resell, as coins tend to have more of a collectible reputation than bars, which are seen as more of a direct asset. Also, remember that while bars are much easier to store and stack, they also tend to have higher values. When in doubt, don't buy. And make sure you get a proper receipt and all verification data when you do. Do you think that gold is a good investment during a recession? Let me know in the comments below. I hope you enjoyed the video. Make sure you like and subscribe so you don't miss out on any future content. See you next time.